Hey traders, good day to you all. I'm back again with another eye-opening video. I believe we have watched my video on time frame analysis and the other video on candlestick pattern that matter. Candlestick patterns that matter. Apart from your understanding of structure, apart from your understanding of some elementary Elliott wave theory, you need to watch my training session on time frame analysis and candlestick pattern that matter as a precondition to understanding this lesson we are going to be taking today. All right. So I'm going to show you today session analysis, how you relate your session, trading session with candlestick pattern and time frame analysis. All the videos I've been doing in recent times are geared towards understanding how to take your entry properly. I want to ensure that as many that have subscribed to this channel or as many that are in my other platform following me are here to get to understand how to solve their entry problem. The biggest problem in the market is not really just to get direction. All right, you can get the best direction. You can be a perfect man, a perfect analyst when it comes to getting a good direction in the market. But if you are bad in your entry, guys, if you are poor in your entry, guys, you are not going to make money out of the market. So you must be a perfect analyst in your direction, getting your direction right, and you must be a perfect analyst in getting your entry right. Efficient entry is one of the best skills anybody can have as a financial analyst. If you know the direction of the market and you don't get the entry right, you are going to lose. And after you have lost the trade, the market is still going to go your direction. How painful it is when you forecast that market will go down, and then because you are too poor in your entry, you enter a sell, market goes off, take you out of the sell position, and then flush down again. Later, you now see that the market has gone to your direction. How painful does that look, guys? So, in order to solve this problem, I have to, bring out some courses that has to do with time frame analysis. I move ahead after time frame analysis. We took a look at candlestick pattern that matter. After candlestick pattern that matter, I want to relate these two, guys, these two lessons, time frame analysis with candlestick that matter. I want to relate it to session analysis. All right, session analysis. Guys, these are the three things that you need, guys, in order to have efficient entry. All right, these are the two lessons you need to have efficient entry in the market. All right, so of course, you know that I always take a particular pair as an example. I'm going to take a particular pair as an example, provided you have done your background analysis. Must have done your background analysis. What do I mean by background analysis? You should have done your fundamental analysis. Assuming we have done our fundamental analysis and we have forecasted that this market, this particular pair should go down because CHF may have a negative interest rate right now, and even the AUD has a slightly positive interest rate of 0.35, and then CHF has a negative interest rate of minus 0.75. So based on their interest rate, you may want to think that AUD will have an edge over CHF. That is, you may be tempted to think that you should have a buy, you should be looking for a buy of AUD CHF. But right now, there is a global economy instability right now, and we are beginning to think that the possibility of recession in major economy is very likely. Why? Because there is inflation. There's rise in inflation in almost all developed economies right now. New Zealand is experiencing inflation. Australia, inflation is on the rise. United States, inflation is on the rise. United Kingdom, inflation is on the rise. Germany, inflation is on the rise. Japan, inflation is on the rise. All major economies are experiencing inflation right now, guys. So we are thinking that could lead to global economic recession. Okay, so based on this, guys, I would love to tell you that right now we are in a risk-off environment. We are in a risk-off environment. No investor will want to massively buy currencies right now. All your GBPs, your euro, your AUD, all of them are expected to go down in current session. And that is in a way in line with this analysis. All right, that is in line with this analysis. After these three waves up, we have one, we have the 1, 2, and 3. This is a WXY structure. We're expecting this to come down. Okay, this session that we're expecting, that we are thinking there will be a possibility of recession if this current supply gap problem, supply gap is not covered, supply gap of energy, if it's not covered, there may be this problem. Remember, Canada, you know, is one of the major exporter of crude to Australia, and if crude is becoming expensive, and then it means that it is to the advantage of Canada, but to the disadvantage of Australia. That will be a problem for Australia economy, because that alone can create inflation, because when the cost of energy is high, okay, when the cost of gas, cost of energy is high in general, it will lead to high rise in goods and services. Are you okay now? So if we are expecting this to come down, guys, then that is in daily, what you have to think about. Remember, when we talk of time frame analysis, we say when there is a move down in daily, you've got to take your fib. Remember, we can't extend our fib to this place because of the concept of orthodox bottom. This is where this impulse ended, not here, guys. Okay, it is here. Okay, so what happened here? 3 waves up and 3 waves down to break this low is part of the corrective structure. So we cannot fib a corrective structure as part of an impulsive move. It's not going to be possible, guys. So our impulse measurement will end here. So we get to take 50 to 61.8, because this is an expanding flat. You can actually get to what? 78% retracement. You can get between 61.8 to 78% retracement, and that's what you see here. So now, haven't seen this, you know, what we have to look at now is at the fib level. That was what we learned when we consider candlestick pattern that matter. We say we want to see the candlestick formation at the fib level of 61.8. all right, and if you look at this very well, you see that we are getting, you know, we are getting at our fib level, we are getting a candlestick pattern. We are getting candlestick pattern that really matter. Look at this one here. This is a pattern that matter. Look at this one. It's a pattern that matter. Look at this one. This is a pattern that matter. Can you see? Pattern that matter. Can you see all of them happening at resistance? And then if you take if you check this, all right, on the divergence point of view, you will see that this particular pair has no divergence. So because it has no divergence, it's telling me that this is a fake flag. You know, some people will be tempted to say that this is a flag formation that will break up to the upside. Guys, it's not going to work that way. Why? Because this particular pair here is making a lower low, lower low, lower low. And the indicator is making a lower low, lower low, lower low. Since they are facing the same direction, they don't have divergence. What they have is a convergence. And a convergence means that every available pullback to the upside will make a move to the downside. Do you understand now? And you can see right here, guys, that you are seeing what is called a bearish hidden divergence. If you take a look at this high here, guys, this high here, guys, is lower. High here is lower than the high here. Is that not? Come to check the corresponding level on the stochastic. Okay, check the corresponding level on the stochastic. Okay, check the corresponding level on the stochastic. So what do you have, guys, on the corresponding level of stochastic? What you have is a higher high. Okay, so you are having a lower high on the chart, but you are on the, remember, on your direction time frame, which is the daily, you are having a lower high on the chart, but right here, guys, you are having a higher high on the indicator. That means that the sell-off that happens here is going to be very small comparable to the sell-off that is going to happen here. Okay, that means that here will give us a better price to sell than here. That is why stochastic is pushing upside here than here. So this is this side is, this point is lower than this point, but right here this point is higher than this point. Remember, our lesson is on session analysis and relating session analysis to time frame analysis and candlestick pattern that matter. This is how we are going to relate the three to make, you know, a sense out of it. So now let's move. We have seen the structure now. We are done with the structure. We have to go to the time frame analysis now. We are on the daily, which is our direction time frame. And you remember why we were doing candlestick pattern that matter? I did tell you that candlestick pattern may not, you know, may not matter much in the lower time frame compared to higher time frame. So when you come to this higher time frame on the daily time frame, at the top here, you are seeing this candlestick here. Can you see this candlestick here? You are going to have this move. All right. But here, do you notice that here you are not seeing a bearish engulfing here? Rather, you see a very powerful bullish candlestick, and you are seeing a smaller bearish candlestick. I'm not going to look for sell opportunity here. And do you see that? Does it go too far? No, it didn't go too far. It has to come like this. This is a better one. This is a better one. All right. Go to step down. You know how we do it under candlestick pattern that matter. You have to drop this one to lower time frame like 1 hour. That's how you are going to catch this trade at 50% retracement. Here, you catch this move. Do you get it now? Okay. So now, let's focus on the current market price, guys. And it's going to be very useful for you when market open. Can you see that we already have this candlestick pattern here? Let's close it here. We already have this candlestick pattern here. This is an indecision candlestick followed by boom to the downside. This is a sell pressure. This is a sell pressure, and the market is right at the top. Remember, we are going to check the one that the market get to a retracement level of 50 to 61.8 on the daily time frame before we step down to look for sell opportunity. Now, what do we do here, guys? We have to go to 1 hour time frame. What do we do in 1 hour time frame? We recognize impulsive move to the downside. Where is the impulsive move to the downside, guys? Look at it from here to this place. All right, you have to spot 50 to 61.8. Immediately you spot 50 to 61.8. Yes. Now, guys, the lesson of today now just started. All I've been doing for you is the background analysis based on what we have done. Not that you just come straight and you now apply session analysis to your trade. Now, as soon as you get here, you want to get entry at this level. What you have to ask yourself is that before this market gets to the supply area at 50 to 61.8, did you see a situation where market goes through consolidation, market goes through reaction to grab liquidity here, and then at what session are you seeing this move to the downside? If you have to do this, then you now ask yourself, what session like to go through consolidation phase like this? What session like to do this breakout to the upside like this? And what session like to make boom to the downside? All right. So if in that analysis, you can see that this consolidation there happens in Asian session, all right, and then this reaction to the upside to grab liquidity here happens in the London session, then you know that this move to the downside is a high probability one that will happen in New York session. All right, New York session. So if you look at it, this is 1800, 1900. This is 1 a.m. at 9. This is purely New York, Asian range. This is Asian range, guys. This is Asian range. Let's change the color. Let's change it to this color. Can you see? This is the Asian range. Look at the time that this one is formed. This is 8 o'clock in my local time, 8 o'clock in Nigeria. All right, this is 8 o'clock, which is London's open. We and London, we have almost the same time. So if Asia, London now come, this is the reaction. Can you see? And then after the reaction is formed in New York session, you are now having a market that is pushing down. This is 1300, which is what? New York time. This is New York time. Can you see? If you have this behavior, if you analyze your session like this in relation to this market coming down, taking the fib in lower time frame and the market coming down, correcting straight to 50 to 61.8, and when you analyze the three different type of sessions with their behavior, you see that it's matching this liquidity graph at 61.8 perfectly. Then you know that your trade to the downside is going to be a perfect one. All right, you have done all that is required of you. This trade is going to be a perfect trade to the downside. Then somebody will ask me, Nat, where am I supposed to put my stop loss if I'm to take this trade, guys? Just come take a fib of this impulse. All right, where is 50 to 61.8? This level. Where is 78%? This level. Just above 78% retracement. Put your stop loss here and expect the market to move in your direction. Guys, do you understand? Remember, at 50 to 61.8, you must look left and see if you are able to get a supply area. All right. Check out for imbalance candle, guys. This is an imbalance candle. It's an imbalance candle. So how do you get the supply level from this imbalance candle? Look at the candle that formed before it, guys. Where does it stop? Here, boom. Look at the candle that formed after the imbalance candle. Look at the candle that formed, this bearish candle. Where does it stop? Here, boom. So in between this level, the price in between this level is a supply zone. All right, is the supply zone. And you can see the market at that level coming to the downside, coming to the downside. Do you get it now, guys? Let's go and check out another example to illustrate this concept. Let's check out another example. Let's check out another example, guys. Okay. Let's check out another example. Look at this. Look at this. You see these three waves down. You see this massive move to the downside. So if you take the fib on the daily, remember this is not part of your impulse. Your impulse does not stop here, it stops here. Okay, so the retracement on the daily has ended here at 50 to 61.8, and then you now be monitoring on the daily time frame the formation of candlestick pattern that matter. And what are those candlestick patterns that matter? You see that you see railroad track or railway track, or you see an engulfing candlestick pattern. Here, right now, guys, you see this pattern, correct? Okay, this has a little body, the two have a width. That's what is called tweezer top, tweezer bottom. I have not taught you that one. What I look forward to is engulfing and what, guys, and railroad track. So this can be, you can view it, you can call it another candlestick pattern, but I'm not bothered. What I'm interested in is, do I have the red that engulf the previous green? Yes. So in as much as I have it like that, I'm good to go. So what are you supposed to do, guys? What are you expected to do? Just mark up this particular candle here, because you are not only marking up this candle. You see, I did not mark up the candle here because I saw this red. No, because it has not got into structural area. I want this correction. This correction on the daily has got into structural area, and I can spot a very big supply zone here, guys. Look at it. Small candle before this big one, boom. Okay, another one here, boom. Can you see? This is supply area. So what am I looking for in the supply area? I'm looking for engulfing candlestick. I've gotten one here. That is correct. So what do I have to do right now, real quick, guys? I have to go to 1 hour time frame. I want to go to 1 hour time frame. I want to see impulse on the 1 hour time frame. Where is the impulse, guys? Where is the impulse? Look at the impulse here. Okay, look at the impulse here. From here to here is the impulse. Okay, is the impulse. Okay, do not bring it to this place, guys. Why? Because this is not part of the impulse. The impulse stop here. This is the orthodox bottom. This is not the orthodox bottom. Okay, let the impulse end here, end here, guys. But you see that, let's clean up this supply zone. Let's not clutter the chart, guys. Okay, let's remove this. You have done your work. Thank you. All right. So can you see? Because you have this structure, you have the 1, 2, and 3. This is an expanding flat, guys. And for every expanding flat, it can get to 50, it can get to 61.8, it can get to 78% retracement. So in this case, you don't expect it to stop here. Let's mark 60 to 78% retracement. And I will tell you why it has to get to that level. 61.8 to 78. Okay. Now let's remove the fib and let me explain to you. All right. You don't expect this market to end here. That's number one. Why is it that you don't expect it to go down from here? Look at this one here. Look at this move here. It has broken this low. So this one to the upside must break this top. But if you want to have idea of where this upside is going to stop, just look for demand zone based on how I normally do it for you guys. Look at demand zone on this, supply zone rather, on this impulse. Can you see? You want to see where you have a big candle to the downside. In between or among this candle rather, where do you spot a big candle? This is a big candle. Where is the candle that formed before it? Boom. Get another one. Where's the candle that formed after it? Boom. This is the supply zone, guys. So when the market gets to this area, it has completed 61% to 78% retracement. And then what you just need to do is, after you take this impulse measurement, okay, now at this level, you are ready to sell. You are ready to sell, guys. You are ready to sell at this level. Boom. To the downside. Where's your stop loss? Your stop loss is slightly above 78% retracement. But you see that based on the techniques that we use, guys, the stop loss is going to be hit here. But that is not a problem. If your stop loss is hit, as long as you have just risked 1% of your capital, you have nothing to worry. So what you do is that you see that this is a graph of liquidity. Okay, if I have to trade this, my stop loss will not have been hit because I know this move to the upside will come. And as soon as it comes, I'm going to have a flush to the downside. And as soon as that happens, I want to take a fib of this last impulse again. I want to take a fib. I want to target my 50 to 61.8. And because you see this is an expanding flat, I told you expanding flat and zigzag corrective structure will get to 78% retracement. Can you see? Exactly at 78% retracement. What do, guys? Take your sell opportunity, stop loss slightly above 78% retracement, and that is a boom to the downside. Can you see? And then remember, what we are doing is we are also doing session analysis. You want to ask yourself, guys, what session did this one come? What session is this? This is 1 o'clock. That is New York session. That is your trade, because we are going to have enough liquidity at New York session. And then this one that I told you you should take, you can take the other time that took you out. What time is this, guys? This is 16:00. My own time, that is 4 p.m. London session is almost closing. All right. I'm not going to take this trade. This one that result to a loss, I'm not going to take it. Why will I not take it, guys? Because this is not happening in the middle of New York session, or it's not happening, you know, when market overlap is happening. But look at this here, guys, exactly at the, you know, opening of New York session. This one is happening, which is the best for us. Okay, which is the best for us. And then when this impulse happened again, you want to take a fib 50 to 70, 61.8 to 78 here, this place. Let me show you guys. Boom. You want to look at when the move to the downside is happening, at what session. This is Asia session. You don't want to take this. You don't want to take it. Don't take it if the structure is completed in Asia session, because in the morning, New York session, London session will push you up again. Can you see? To push up again. Don't enter, don't enter, don't enter. All right, you see 6 o'clock, don't enter. I wouldn't enter all this trade, guys. This is 8 o'clock London. I want to see a move to the upside. Look at the move here. 9, move to the upside. As soon as this move to the upside is achieved, you can get in for the move to the downside. So you want to look at it that way. Look at when this pullback happens from here to this place, you'll see you are touching 50%. And as you are touching 50% and this particular candlestick pattern is forming, you want to ask yourself, okay, what session are you? Where are you? This is 3 o'clock in the night. I'm not going to take this trade, no matter how beautiful it might look. I'm not going to take it because I don't trade in Asian session. Always return to your daily. Always return to your daily. Like now, let's see this. See, do you see that this this market has a move? That's a move. This is a correction, and we have another push. So if you have to take a fib on the daily of this last push here, you see that the correction is over at 50 to 61.8. Even got to 78 because this is a zigzag corrective structure. I told you every zigzag will come to 78. So if you come to 78, the next thing is to look for candlestick pattern that matter. And in this case, this is the candlestick pattern that makes sense. Can you see? Engulfing. All right. As soon as you see this engulfing, what are you supposed to do, guys? Just carry your, pick your vertical at 2. Drop it here, guys. Drop it here. Go back to 1 hour, your entry time frame. The next thing is to go and check an impulse that will occur there. Go and check an impulse that will occur there. Where is it, guys? We're almost there. You have to check what? Impulse that will occur there. Where is the impulse, guys? See the impulse. See the impulse. See the impulse, guys. See the impulse that happened. Okay. And after the impulse, you have to flip that impulse from here to this place. And then you have to check out the corrective structure that is formed. Mark 50 to 61.8. Okay. And then mark 78. All right. So if the structure that formed is an expanding flat or a zigzag, you have to target 61.8 or maximum 78% retracement. Okay. And as soon as the market get there, you need to check the left. Do you have a demand level? Yes. So from here, you're going to get a move to the upside, guys. Boom, to the upside. Can you see? So what gives us this clue, guys? We have seen engulfing candlestick pattern at the end of corrective structure in the daily. That is why we are confident to come and look for impulse and correction in 1 hour time frame to get this our entry, and we are on a move to the upside. So that is why we often say that what daily time frame can be your direction time frame, while 1 hour time frame will be your entry. Is that okay, guys? So let's just look for another pair and look at them and how they work. Okay, look at them and how they work. Okay, let's look at how they work. Okay, look at just to illustrate the point. Okay, to illustrate the point, want to look at structure, what is happening in the structure. I want to see a very clear example that I can show you. Which pair am I going to get example now? I want to see example. Okay. So this is NZD card. NZD card. You see? All right. Let's look for example here. Okay, the other time we look at Asian pair. No. Don't let us look at another one that work in the Asian. Let's look at another one that work in the London. Okay. All right, let's look at this example. You have this market is a bearish market because it's sloping to the downside. It's a bearish market. So what you have to do right now is you see this leg. All right, this leg here. Okay, you have the move 1, 2, and 3. Move to the downside. Okay, here you have impulse 1, 2, and 3. Movement to the downside. Can you see? So now let's analyze these two, guys. What I taught you is that on a higher time frame, you look at the impulse. Okay, the next thing is look at correction and see if you are able to define the correction. Oh yes, A, B, and C. The next thing is does the correction get to 61.8? Oh yes. 50 to 61.8? Oh yes. That's the area here. The third thing, the third video I treated had to do with candlestick pattern. Are we able to find engulfing candlestick pattern with a rejection on the bullish part of it? Oh yes. Where is it? I'll show you now. This is the pattern that come at 50 to 61.8 on the higher time frame. And as soon as we get this, guys, we are thankful to Almighty God for giving us this, because we know money is going to come. What do? Mark it on the daily. All right, step down to 1 hour. Step down to 1 hour, guys. Step down to 1 hour. Identify the impulse. Where is the impulse on the 1 hour? This is a procedure that you must follow. Just as medical doctors, they follow their procedures, you must follow your own procedure. You see, because this is a regular flat, a running flat rather, is a shallow retracement and might not get to 61.8% fib retracement. So here is okay, but we need to find out what session are we here, guys. What session are we here? This is 3 o'clock in the midnight. In the night, do not take this trade. You see this move, do not take it. It's going to pull back at London. That is why you must not take it. Midnight, no, don't take it. What happened here? After the impulsive leg is formed that I say you should not take, flip this one again. Can you see? Can you see why I say don't take it? If you flip this one again, the market is coming back to 50 to 61.8. And what session is that, guys? 9 o'clock in the morning. This is London session opening. Can you see? You were thinking you are missing opportunity here. No, another opportunity is going to come, and that's the opportunity you see here. Okay, this is session analysis. And then when you want to check whether you are able to see consolidation, you can step down to let's cancel this, let's delete this. I will now check out this level on smaller time frame, like 15 minutes. Okay, 15 minutes time frame. Let's hope I will be able to get it, guys. Where is this circle? Where is the circle? From 15 minutes time frame, guys. I think this is the circle. Yes. Can you see? 15 minutes time frame. All right. Can see that we have moment of consolidation. We have moment of consolidation here. You have moment of reaction, and then boom to the downside. Okay, boom to the downside. And then if you miss that one, look at another moment of consolidation. You see all these wicks you see to the upside, they are the reaction, and then you have boom. Can you see how you now introduce section analysis into your trading? This is how you capitalize on it. Do you understand now? Let's go back to daily. Let's do one more example to capture the relationship and how you make use of your session into all these, guys. All right. So you see another wave to the downside. You see another wave. You know we are bearish. See another wave to the downside. You need a retracement to 50 to 61.8, and you need a move to the downside. But then you need a candlestick pattern here at the structural level. Okay, if you take this field from here to this place, brother, here to this place, what is this, guys? Here is between 50 to 61.8. And as between 50 to 61.8, what do you need, guys? You need a candlestick pattern at a critical area. And what is the candlestick pattern, guys? Look at this. This is what is called, this one, railroad track. You can have some other name you call it, but this qualify for my own railroad track pattern or railway track pattern. Okay, so what do you do on the daily? As soon as you see this at the structural area, you have to look left. You look left, guys. Do you see supply? Yes. Can you see supply? Yes, here. You have to shift this one to this week. But this week is part of a buy. This is the only middle from this price to this price level that you have excess supply over demand. And that's the exact area where you see this candlestick pattern that matter. So what do you do, guys? You see me do this severally. It's just for the knowledge to sink. Drop it here. Go to 1 hour. Go to 1 hour. Come back here. At 1 hour, recognize your impulse. Okay. Recognize your impulse. Recognize your correction at 50 to 61.8. And then take your trade. Take your trade. Can you see? Take your trade to the downside. All right. So that is how you do it, guys. That's how you combine time frame analysis, you combine it with candlestick pattern that matters, And then when you see this candlestick pattern that matter on a higher time frame, on your direction time frame, at the top or at the bottom or at the structural area, like a fib level area. Once you are done with this, what is next for you to do is to go back to smaller time frame, search an impulse at that point where you saw a candlestick pattern, look for corrective structure, and then look for your supply or demand area, get into your trade. Get into your trade is very, very important. There is no way you will marry these three together that you will not have a proper understanding of how the chart works. So that's just what I want to show you. But remember also that lastly, among the procedures, check the session where you are. If you are in the Asian session and the market is playing out, do not take it, because when you get to London session in the morning, the market is going to retrace. So if you have made plenty trade profit, your profit is going to retrace. All right. So know that there will be inducement in London session, whether to the upside or to the downside, there will be inducement. So you got to prepare yourself against such inducement so that it will not affect your trading plan. Okay, guys, I've come to the end of this video. If you have not subscribed to my channel, please do subscribe. All right. If you have subscribed to it, just press the notification bell so that you can receive notification for every content that emanates from me. All right. So have a lovely day, guys. Thank you for watching. Bye.